Hey, rich friends, it's your girl Cha-Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that's something that you guys are looking for, you are in the right place at the right time. Now, I do just want to take this time to thank all of my returning subscribers. I appreciate you guys for sticking around and just being patient. I know I usually drop videos every Monday, Wednesday, and Friday, and I did take a break these last 2 weeks. However, we're going to be right back into the swing of things, bringing you guys new content, new ideas to explore, new strategies, new indicators, because I really want you guys to understand this so that you can make money and create the lives that you want. That's really what I'm in it for. Once I learned that you can make money from anywhere, anytime using your phone, I said, this is something that I can get used to, and I wanted to just share that with y'all. So thank you guys for returning to my channel. Thank you for being loyal subscribers. I really appreciate it. Now, if this is your first time on my channel or you are a new subscriber, welcome. I'm so happy that you decided to consider trading as a part of your financial journey. It really is something that can be lucrative and beneficial if you take it serious. So you don't just have to learn from me. I encourage you guys to just keep learning and keep exploring until you actually find what works for you. But if you are looking for a structured learning program that has an app, right, that you can learn on your own pace at your own time, I did recently launch the Money Mantra Learning Portal, where you can get mentorship directly from me. So if that's something that you're interested in, you can find the information down below in my description box. Or if you want other ways to connect with me outside of YouTube or TradingView, the information is there, and I'm open to having conversations with everyone. So in today's quick video, we're going to be talking about a topic that I think is pretty common. I feel like this is a question I get a lot, especially from my new students or people who have recently started trading Forex, and that's, do time frames matter? And I would say absolutely. I think time frames do matter, but it all depends on your trading style. Now, you guys may want to write this down. This is something that I don't hear a lot of educators discuss, but there are different types of traders, and you just have to figure out which one you are. So if you plan to hold your trades for a short amount of time, and this is actually why TradingView offers different time frames. If you plan to hold your trades for a short amount of time, 1 minute to 5 minutes, and honestly less than an hour, or no more than 2 hours, I would say, you will be considered a scalper. Now, a scalper is somebody who is just in and out with the bag. They look at smaller time frames and they profit off of short market moves. Now, when I first started trading, I was for sure a scalper. I was trading binary options on a platform called Pocket Option, and I was making money in minutes with high frequency trading. So in that case, I was looking at the chart on a 1 minute to 5 minute time frames, and I was able to make my profit extremely quickly. Now, if you're more of a traditional Forex trader, you may be a day trader, right? You may be an intraday trader, or you may be a swing trader. Now, an intraday trader is somebody who makes their profit within 1 day. So you will still be looking at smaller time frames, anywhere from the 5 to the 15. Because if I look at this on a 15-minute time frame, I'm looking at the same data, but on a larger time frames, I'm able to see more of it. So for example, let's just go back to the 5 minute. If I was looking at Euro USD on a 5 minute, I can see that for this 5 minute, this would have been a really great scalping opportunity, because on this 5 minute candle, it dropped from 1900 all the way to 10835. So that's about 65 pips in 5 minutes. So even if you were using a $2 lot size, you made about $130 off of that quick market move, because that's what you were looking at, the 5 minute time frame. Maybe you got all of your confirmations that you needed, and we can see that even on a 5 minute time frame, the market can move drastically and you can really be profitable. Now, if we look at this on a 15-minute time frame, we still see that huge move that happened, but we are just seeing more data overall. Because if you think about it like this, three 5 minute candles is going to be equals to one 15-minute candle. And I just want to highlight this huge candle here just so that as our time frame increases, we can see what happens to this large candle. So far we've discussed scalping, and scalping means you want to be in and out with the bag. You're analyzing your charts on 5 to 15 minutes. And then we have our day traders, right? Which is really common. This is somebody who makes their profit within a day. So you can look at your chart anywhere, I would say from 5 minutes to an hour, right? Because sometimes you do get a huge market movement for the hour, and other times you don't. Because if you think about it, 4 15-minute candles are going to be equal to 1 hour candle. So a 15-minute with 5 to 15 minutes up to an hour will be for day traders. Then we have our swing traders, and our swing traders are people who, they don't mind staying in their trade for a couple of days, right? They don't mind staying in their trade for a couple of days. Now, a swing trader is somebody, for example, let's say they entered their trade here, right, for a buy. And this would be on Thursday, May 30th. But then they got out the trade here. They stayed in the buy the entire time, and they got out the trade June 3rd. That would be considered a swing trader because they don't mind analyzing their trade on the hour time frame or even the 4 hour time frame, right? We still see that push up because they do intend to stay in their trade for a couple of days, which is completely fine. Everybody's trading style is going to be different. You just have to decide what works for you. And then we have position traders, and position traders can stay in their trades for weeks or even up to months. But as we can see, even if we were looking at this on the daily, we can see if somebody entered the trade here and the market pushed up all the way to here. This is a couple of days, at least 2 weeks, but they still would have been able to profit. So the first thing you have to really decide is what time frame do you actively want to trade on, right? Do you want to trade on the daily time frame? Are you okay with staying in your trade for a couple of days? Because this is something else you have to consider. If you do your analysis on the daily time frame, it's going to take a couple of days for your analysis to play out. If you do your trades on the 4 hour time frame, it is going to take some time for your trades to play out. If you do your analysis on the 5 minute time frame, this is, of course, a quick way to make a profit, but the time frame that you select is sometimes going to influence how fast or slow that profit is made. Now, for example, let's say we were looking at the market and we were in the market from this time to this time, right? This is a couple of hours, and we'll even get an info line here, right? And we're just going to drag it from here to here, right? So that's about 18 bars, or that's about 18 hours. But we can see that the market was still consolidating, which means that it wasn't really moving. So you can do your trade on the hour time frame, and you can be in consolidation for a couple of hours and absolutely nothing can happen. Or you can be on an hour time frame, and let's just say you enter your trade here and then you get out here. We can see how many hours this was. Right? That was about 6 hours, but within this 6 hours, that was about 47 pips that the market dropped. So as we saw, you can profit from looking at your charts on the 5 minute time frame where we saw a huge drop, where you would have been able to secure pips, or you could have looked at the chart on the hour time frame, and then you still see you would have been able to secure those pips. However, it would have taken a couple more hours. Now, I think this was the candle that we initially looked at. Let's actually look at this one candle, right? This was the huge candle. And let's just pay attention to this candle as we go to smaller time frames just to see how long it would have taken us to make the same amount of profit. So I hope you guys are following. If you're following along, it is making sense. Just go ahead and drop a 7 in the chat. So the candle with the black line on it is the candle that dropped from 109.02 all the way to 108.24. So that's about 80 something pips that it dropped within an hour. Now let's say we were looking at this on the 15-minute time frame. We still see this huge move being made. Let's say if we were looking at this on a 5 minute time frame, we'll literally see that it would have taken 5, 10, 15, 20, 25, 30, 35 minutes before this trade actually picked up some momentum. So instead of waiting 6 hours like we did, if we were analyzing this trade on the hour time frame, we can see that again, we're still able to profit on smaller time frames if the market makes a huge move like that. So the time frames really do matter, because you can again make your profit quickly depending on how you're analyzing and what you're looking for. Or even if you were looking at it, let's just say for something like the weekly, it looks like the market wants to continue to drop down to here, but that isn't going to happen in 5 minutes. It's not going to drop 100, almost 200 pips in 5 minutes. So pretty much what I'm trying to say is that you need to be mindful of the time frames that you're looking at. However, it is possible to profit off of different time frames. So if you're somebody who you don't have the patience to wait for days for your trades to play out, just go ahead and look at it on a smaller time frame to see if that analysis actually makes sense. Because when I zoom out, no matter which time frame you go on, you're always going to see something like this happening where the market is buying and then selling and then buying and then selling and then buying and selling and then buying and then selling and then buying. Now, on this particular chart, this took weeks to happen. But if I go down to, again, the 15-minute chart for people who want to be day traders, we're still going to see the same types of moves happening. We're going to see the market pushing up and then the market pushing down and then the market pushing up and then the market pushing down and up and down and up and down, and so on and so forth. So yeah, time frames are really something that you want to consider. If you want to look at multiple time frames to see if there is confluence, then you definitely could do that. Confluence just means that what's happening on the higher time frames is also happening on the smaller time frames. So for example, if we look at Euro USD on the daily, we can see that on the daily chart, we have a huge red candle. We can see based on, if we were to put a trend line, we can see the market is in fact going down. We see that on the daily. We see it on the 4 hour, right? We see it in more detail on the 4 hour. We see it in more detail on the 1 hour, and we even see in more detail on the 15 minutes what was actually happening within this daily candle. So I really hope that this video was helpful. If you guys have any questions about time frames or if they matter, you can just leave me a comment below. Let me know what your favorite time frame is to trade, and if this video made sense to you. If you guys want to register for a personal mentorship, the information is down below in my description box. And that's really all I have for you guys today. Until next time.